Jonathan Camarda, Chief Investment Officer, coming to you a little early this week as my schedule is somewhat densely packed there on Friday with meetings. So wanted to get the message out to you fine folks out there. And what we're dealing with is a dichotomy in the markets on multiple levels. So let's start off first with another bull run, a smaller one than the one before, which was smaller than the one before this year, within an overall downward bear trend. As looked like perhaps we could glide into the end of the quarter from oversold levels to give some relief into some window dressing, usually window dressing by the large money, the sovereign wealths, the pension funds, and all that. And that looks like it's ending with a whimper as well, as we saw the heavy winds of volatility blowing early this week, letting us know that the downtrend is there. So again, client portfolios, just to pivot on the client level there, we're still holding a lot of cash. You may have noticed we've taken some shots, obviously, to gain some downside alpha back, within a downward trend to make some money. However, we've remained very prudent in heavy cash positions, have some shorts that are back still on now, with just small long positions, being long certain sectors of the market that were oversold. And so really on a macro level, what we're really dealing with is a real delineation between inflation, the hot numbers we've seen on the PPI and the CPI, right? These numbers that have driven the market down and driven the Fed to lift rates up. Well, here's the deal. We'll see this week what they come in as, but the smart money, now the big money, when you start to look at futures, right, which I tend to do, through some of the analytics software, you're looking now as we move into 2023, not to get too ahead of you there, at certain inversions in the yield curve, which in English means actually projections of more recessionary, deflationary, if you can believe it, winds, which portends of the Fed, drum roll please, maybe lowering rates into 2023 if you can actually believe it, right? Well, obviously the smart money has us currently, and where we are right now, at 75 basis points the next meeting, and most likely 50 after that. Stay tuned. However, we are already whistling through the graveyard of what's probably a recession as we speak. Might be a light one, a shallow one, but nonetheless. And all you have to do is look at inventories, slow down in consumer demand, consumer confidence, as well as the strongest kid on the block, commodities, finally got their block knocked off over the last month. And you see energy, no pun intended, basically a vacuum in energy as it has dropped, very, very hard. Now, we've seen a little bit of a rebound here. And certainly if you've heard of Macron whispering to the ear of Biden on the European trip there, that the Saudis may not have as much supply when you do request that they open up the spigots. And that may portend of a supply-demand dynamic there that is bullish on energy. However, make no mistake, energy and commodities are on a downtrend now. Okay, we see this. And why this is important is that portends, again, of weakness and deflation. And that's why, again, where we've had very little exposure all year, in fact, we've had some short exposure to treasuries, that they may be attractive in a 3% yield to insulate along with cash and the U.S. dollar and some hedged, holdings that we hold for clients in different strategies. So it really is a binary situation. So how do we navigate? Well, if you look at your statements, again, you have a heavy amount of cash. Works very well in this environment to be nimble. We're looking at pockets to earn some yields without the volatility to come along with it. And at the same time, we're trying to take our shots where it makes sense in sectors that are doing well, like healthcare, which has held up well. Energy we got out of that for the most part, except for small positions in certain strategies. So again, that's what you do, right? Because as you look at your statements and you say to yourself, I'm down a lot, but if you really think about it and you look at the percentages, everyone looks at dollars, which, let's face it, are emotional, right? We all do it. But the percentages are rational. And as you stack them up against the indices, looking pretty good on a relative basis. Also know this. This is the worst start 6 months of a year going back to 1970. I believe that's pre-Nixon. Yeah, I'm not a history major. However, that's worse than the financial deleveraging, the tech bubble, any one start of the year, not the total drop. We might not have seen that yet, right? So the whole key is, metaphorically speaking, like my kids, the shows they watch, right, on Alone and Life Below Zero, we are now going through the rough Alaskan winter terrain, and we do not want to get mauled in our tent at 3 a.m., right? We want to be upright to metaphorically surf the waves of Hawaii in July under the sun, which in English means what we want to do is retain as much capital as we can, and on a relative basis, that's what we're doing, so that when the bull market comes, and nobody rings a dinner bell for that, but when it comes, that we have as much of a stash as we possibly can when the market certainly rips to the upside. That's why we all are in this prism, right? Because in the market as well as real estate are the two only areas that you can have the upside you see. That's why we deal with the washing machine we're in now. That doesn't mean, like most folks out there that live by buy and hope or hold what we have is the rule. The game has changed with the algorithms, the computers, etc., and more conducive trading platforms that we don't have to believe that the earth is flat. So with that being said, we're rolling up our sleeves. Have a great Independence Day. Enjoy your family as we try to take as much of that toxicity for you as possible. As we continue to use eternal vigilance, and we never forget it's your money, you earned it, and we want you to keep as much as we can, and at the same time be opportunistic in what is still a barren terrain. That being said, we definitely appreciate your trust. Until next time, Jonathan Camarda, stay frosty, put a hot dog on the grill, have a swim in the pool, and just know that we'll be working for you. Until next time.